I'm Rachel Horgan. Join me each episode as I sit down with a guest co-host covering the latest business stories in the Seattle area. We'll read the news so you don't have to. This is The Weekly. Welcome, everybody, to The Weekly. I'm your host, Rachel Horgan. If the audio sounds a little different today, that's because we are in the studio at Zillow. And I'm going to introduce my guest right away because we're also videoing this. So she's sitting right here, and that would be awkward if I didn't introduce you.
Yeah, hello.
We have Dr. Skylar Olsen, Chief Economist for Zillow. How are you doing?
I'm doing really good. Yeah,
good.
Absolutely.
Good. I just wanted to explain, I know we've got some new listeners that have joined us. We're halfway through the year. And I explained a little bit to you about why I started this podcast, but it really was to make business news more approachable and accessible. A lot of people don't have the funds to pay for the subscriptions. People don't have the time to read all the articles. And also I wanted to make it fun. So when I was thinking about this episode, who can make economics fun but Dr. Skylar Olsen?
Well, I do my best.
Yeah, we've met 4 or 5 years ago because I was working for a business publication and we were planning an event and doing economic outlook. And we have you do an update every January, and you do a great job. So I wanted you to kind of come on here. This is going to be a special episode. Instead of going through the top 5 articles, we are going to do a mid-year economic outlook.
Yeah, let's get
fun.
Set and get everyone kind of anticipating the rest of the year.
Yeah, explain. And we're going to explain the housing. We were just talking about how, I'm not a housing expert. I'm not an economist. And I think a lot of the listeners aren't either. So we're going to try and break it down and explain it. But before we do that, let's tell a little bit about you. You're a housing economist with over a decade of experience studying the U.S. housing markets and consumers. You've testified before Congress about fair housing issues and regularly sharing your housing market expertise on stage, in print, and on local and national television. We were just talking about you're on CNBC and you love public speaking.
Absolutely.
You also teach at Real Estate Evolution and Disruption at the University of Washington, where you earned your Ph.D. and was a visiting scholar to the College of William and Mary during fall of 2023. Did I miss anything? What else have you been doing?
Oh my gosh, I have a backyard farm, 10 chickens.
Wow, okay.
Yeah. And I haven't lost a chicken in over a year, so I'm like a better and better chicken mama.
Is that a good sign? I feel like keeping something alive more than a year feels...
Yeah, I think it's good, because we were losing a lot of chickens before.
Oh, okay.
Those raccoons, coyotes.
Oh.
A bald eagle. I caught a bald eagle on top of one of my chickens once.
Wow. Because you're over on the island. Right?
Yeah, absolutely.
Yeah. I know when I was asking you to speak every year, I feel like I had to change your title every year because you just kept getting promotions.
Yeah.
So you're a big deal. But before we get into this, why are you so passionate about economics and I guess specifically housing?
Yeah, I got the economics bug a really long time ago. I think we can all acknowledge and I all understand that the world is really complex. But an economist is going to try and put some sort of structure or logic on top of it to just make sense of the complexity. And then we can try and navigate it, right? So what can and can't I know? And then from my perspective in tech, like why am I a housing economist in tech, is that we build marketplaces here and we can build better ones, right? So my whole shtick has long been, I'm a data transparency freak. I think if, every decision maker in a market has access to good information when they make that decision, whether I'm a buyer or a seller, or I'm a rental property manager or a real estate agent, we're going to have a much healthier housing market. And why housing? It's the center of our lives. Yeah. And it matters a whole heck of a lot. And I love people and it matters to people. And so I can't get away from housing.
And even if you yourself, the listener, isn't buying a house right now, the housing market affects them so dramatically. It's something 20% of the GDP. I mean, it's a huge part of...
Huge.
It affects your prices at the grocery store. It affects everything. So again, if you're not buying a house right now, it still impacts you.
Well, and you're probably renting, right? And these are just so related markets and they impact each other and our livelihoods for sure.
Yeah. Okay, so let's get into it.
Yeah.
All right, so in January, you made some predictions.
Yeah.
Did you see the future? Were you correct? We're halfway through the year. Did your predictions come true?
Yeah. Well, yes and no.
Yeah.
I think if I was completely right, it would have been weird.
Okay.
Because, some of the predictions we were making at the beginning of the year are notoriously challenging and hard to make, but people were desperate to know. Mm-hmm. And that's probably about mortgage rates. Mm-hmm. Myself and many other experts predicted that mortgage rates would be coming down. And I think they, continued to go up. And something that was interesting that happened over the course of this year is that mortgage rates went up when experts were saying they would go down, which I think kind of did impact the housing market in that it kind of shook people out of an expectation to wait for them a bit. So that was something that was kind of a surprise that definitely impacted the market. And then in terms of, what were we right about, were things like how important the rental market would become. We saw, continued growth in single family rentals. I think the way that we framed one of our predictions was that, your starter home, the new starter home is a single family rental, right? Speaking to both, maybe when you become a first-time home buyer, you might need to rent a room out of your house in order to actually afford it. And then also just speaking to, you could, especially in the Seattle area, you could be, you have those small kids, you've been trying to buy a home for a while, it's been hard to buy a home for a while, and so you're renting, in Bothell, or you're renting in Linwood or wherever else, and just waiting to find that home that works.
So you were predicting that we were going to have more rentals, and that came true.
Yeah, basically. And just the pressure on that kind of single family rental market. When I say single family, think like suburban home, and that includes even like townhouse too.
Yeah,
right?
so not
those
like an
rents,
apartment complex.
Right.
Yeah.
Those have continued to experience a lot of pressure, over the course of the year. Yeah.
What about, I know there's a lot of talk about people thinking a recession was coming this year.
Yeah.
What has happened with that?
Yeah, you say that whole word out loud. You don't just say the R word. Yeah. Oh,
well, I'm not in the industry, so it's not as scary.
That's scary.
It's not scary for me.
No, I'm just kidding. I'm starting to hear more and more the recession, and are anticipating it and whether or not we'll head into it. I think that was related to our expectations for mortgage rates coming down, right? That inflation was coming in line and we would start to experience a little more job market stress. And then that would make the Fed go a little easier on us, and they'd let those rates come down. And we didn't see that yet. And, over the full course of the year, people were kind of surprised about how strong the general economy was.
Yeah.
Jobs in Seattle, like our information jobs, were actually continuing to kind of fall, even while nationally they had started to recover a bit. So Seattle looked a tad bit softer, just economically speaking, because we have so much tech, and that was that kind of did get hit a little bit this year, because maybe a market clapback from having kind of grown so fast in the beginning of the pandemic. But no, right now we still not a recession, right? Good job growth, but there's more signs now that there's reason to worry. So, for example, the numbers I think about are the rise in serious delinquencies in auto and car loans, and particularly among younger adults. And that makes sense if, what's going on is general inflation and, rent, so, shelter and all of it is just getting so much more expensive. You're no longer really able to budget. We're seeing savings rate kind of struggle nationally again as well. So the R word might be back.
Well, yeah, I was listening to this podcast saying that, consumer behavior hasn't changed that much, but that doesn't mean that we can still afford it. People are just putting more on their credit card and going delinquent, like you said.
Right.
So
and that you can't do that forever is the scary part. Right.
Well, I gotta better change my spending habit. But let's talk about inflation. So I don't know. I've heard some people say, is it inflation or is it corporate greed in disguise?
Oh, interesting. Yeah, right.
I think there's a lot going on there. That's not the only answer.
No.
But are you seeing the inflation level off? Do you think it's going to continue?
Yeah.
How much is our milk going to be?
Yeah, absolutely. So today, while we're taping, we had the new CPI numbers drop. This yesterday and
what's
this week.
CPI?
Oh, okay. So CPI, Consumer Price Index.
Okay.
That's a big way we talk about inflation. And the Consumer Price Index is the one where it's a fixed basket that doesn't change over time. So we're just watching, those prices bounce around. It's a more volatile measure than, say, the core core inflation numbers, but those CPI core inflation numbers were reported again too. This week's numbers were great. They were a great sign. It showed prices were flat.
Okay.
Oh, so you're like, oh, that's great because that's below target.
Yeah.
Target is just 2% inflation. That's what the Fed is looking at.
Okay.
So flat is great.
Yeah.
Oh, flat.
Well, it's better than going up.
Yeah,
right?
absolutely. The problem is that is that there are components where it's not flat, and that one's my world.
Housing.
So in housing, and in shelter, inflation is continuing. The growth rate is still higher than it should be, or rather than we want it to be. Mm-hmm. And a lot of that has to do with the fact that what we're watching are people who haven't moved in a while. That when they do move, jump onto a radically more expensive rental market, right? And that just keeps increasing the average rent that everybody is paying, right? Because people continuing to kind of jump onto this really expensive market, even if apartment rents are ultimately like the new asking rent is slowing down because new apartments.
Well, I mean, prime example, I'll say my rent is for a one bedroom in North Queen Anne is $1,800.
Yeah.
They just fixed up a 5-unit apartment building across the street from me.
Yeah.
And the one bedroom's going for $2,900.
Yeah.
So I pay $1,000 more.
Right.
And across the street.
Right. So it's still going. Yeah.
Yeah.
And I think that's, and even, what I was just referring to, and we were talking about general inflation and how to break that down. But that's probably, if we just want to bring it local, right? So those big national inflation numbers that we're talking about, and shelter is moving too fast but slower. Seattle is just moving too fast a little bit still. We probably weren't able to build as much to keep the pressure off. And people kind of continue to, we're not really affordable anymore at all, but still more affordable than San Francisco and, other options that kind of keep, and we have a, good job market over the long run kind of prospects. And so this shelter inflation here, the very local stuff, that's still hard. Things are changing over the last couple of months. We're starting to see more of a slowdown because of maybe that R word, right? But it's still a little bit too fast.
Well, you had mentioned a little bit about the amount of housing in Seattle.
Yeah.
I have heard, again, there's a lot of perception versus reality. So I've heard that there's not enough supply. Yeah. Is that real? Is that true? Do you need to be building more in Seattle?
Yeah. Yeah, okay. That's real, and that's very true. And, one of the primary ways that it's true is that the older homeowners aren't downsizing, right? And they're holding on to, let's be real, an incredibly advantageous mortgage rate. Win the lottery kind of mortgage rates. If you're below 30%, that's an incredibly advantageous wealth building, cheap debt mortgage rate. So they're not moving on. And what that looks like is that there are around a third fewer homes listed every month relative to what would have happened pre-pandemic.
Wow.
So a third lower.
So people are really not moving because you've got these people that got a great rate when they bought the house, don't want to move. Right. And so let's say you have a growing family and they are having more kids, they want a bigger house, but they can't afford because of the spot that they got. And nobody else is leaving for them to find another spot. Everyone's kind of stuck in a place.
And you know what's so interesting about the housing, not to seem so delighted by something that's actually a challenge, right? But what is really interesting is right now we've never kind of had more one-person households. Because if you kind of think about what happens with an aging, we talk a lot about, economists think a lot about the aging population, right? All the boomers. And so when you and, let's say we're much older than we are, because they can see us. We're really lovely, wonderfully young.
Millennials.
Yeah. I'm an elder millennial.
Okay.
I don't know about you. I'm one of the, anyway. But let's pretend that we were, much older and if I had a partner and we lived in one house, and then let's say I lost my partner, I still would need one house. And it just becomes one person in a house that has extra rooms, right? I'm a one person in a 3-bedroom house, right? So we've never had kind of this amount of underutilized housing, just in the sense of extra bedrooms within and then just only one person lives there. And then on the flip side, because of the affordability challenge, we're also doubling up so much. So those younger households were doubling up,
Getting
there might be
roommates, yeah.
absolutely getting roommates, still living with our parents, some of us, median age of moving out of your parents' house is now 26 years old.
The median age of moving out of the house with your parents is 26.
26 years old.
Wow,
Yeah.
that's the median age. So
Yes, yeah. So
wow.
there's lots of us that are still in there, I mean, not me.
Yeah.
I launched. But
So I guess, do you see this changing? This is kind of where we're at right now. Where is that going? Are we going to be getting more supply?
Well, so we do expect mortgage rates to come down. Not radically, but they don't have to come down too much to probably unlock us a bit, right? So a lot of those kind of would-be sellers, owners who are just holding and waiting, are probably waiting for, time goes on for them too. They want to downsize or, there are folks that do still want to move up. So as time goes on, what you want in your house starts to not match what you have, and that interest rate is no longer worth it. And so, but with mortgage rates come down, that'll speed that up, right? Because that will be less locked in. And then, just time in general also matters, not just because we'll be less locked in because we expect the mortgage rates to come down, but just those life moments continue going on. Have you ever heard of something called the silver tsunami?
No.
So that's the idea that the older generation will no longer, need the housing because, they're older.
They'll
eventually leave the housing
another
market.
world.
Yes, they're gonna pass the housing on. Is a nice way of putting it out. That's really great, and that would certainly change this picture.
Okay,
but here's the thing. You know how people have been talking about boomers retiring for a long time, and they're maybe just starting to do this now. Well, they're aging in place though, locked in, but. Even before locked in, we did research and found the age that was the tipping point age when you were as likely to go out and rent as buying. Because once you become a homeowner, you're likely to be a homeowner again. When you move, you go buy something.
Yeah, I've seen.
So at what age are you as likely to go rent instead as just become another homeowner or a homeowner again? It's much later than you think. It's 85 years old.
So after they've owned a bunch of homes, then they're like, okay, I'm going to just start renting now.
But at 85, very late stage assisted living moment, Right. Otherwise, you stay a homeowner. So you're not really releasing a net just extra supply to the housing.
They're not giving us the housing as soon as we thought.
No, and it's going to take a while. Yeah. And so, okay, can I promise people affordable housing in Seattle without building a bunch more? No, and because that silver tsunami is not going to come for another 10 plus years. Yeah. So we have to build more to keep up with it. And people still move here, right? So, those boomers, when they release the homes to us, it's going to be very old housing.
I love that euphemism.
Yeah.
Release the homes to us.
Well, it's you have to, in housing, demand is generational. Yeah. So we got to face it.
We have to acknowledge it.
We have to acknowledge that.
Yes. So you've been mentioning mortgage rates as if they're this puppeteer being like, oh, mighty one, what will these mortgage rates be? Yeah, and all of that.
Absolutely.
So help me understand that. I think that the federal government gets involved.
Yes.
The way I thought it is that they decide what the interest rate will be. So I bought a car, it was 4.4% then, and I thought the government kind of decides that, and you're like, no.
There's a part of it.
Sort of.
Little.
But basically, they make decisions on certain rates that then affects my car loan and your housing loan and everything else like that, right? Yes. So then I've heard, again, tell me if this is true, that the Fed is likely not going to raise those rates higher.
Oh, yeah. We always start knocking on wood at this point. No, but yes, right at this point, most experts suspect that the Fed will cut rates before the end of the year, but the Fed came out and said not until the end. So probably not before the election. Maybe once after the election.
Because they don't want to affect the election.
Yes. Personally, I get skeptical, not just because we've been burned before, right, about expecting those mortgage rates to come down, but the most recent economic data that the Fed would be looking at when they decide whether or not to raise or lower the rates that then kind of flow into the rest of the financial market are jobs numbers, market and labor tightness, and those inflation numbers that we talked about at the very beginning. And while a lot of those are getting better, they look more volatile more recently to the extent where, I'd like to reserve the right to meet in 3 months, and talk about it again, right? Yeah. Whether or not we expect it, sure. Of course, right? Because things keep changing. Yeah. So, and we keep pushing back when we expected the Fed to let rates start to come down, and it could happen again.
So, what are interest rates? You said some sort of number of 30%. What's good? What's bad? Where are we at right now?
Yeah. So, the mortgage rate. A mortgage rate for a prime borrower on average right now is 6.95%, according to Freddie Mac. So let's just call that like near 7. Sure. That's very close to 7. And what's painful about that level is that when mortgage rates are at that level, the typical home, when you translate that into what that mortgage payment would be, if say I had like 20% down and then I estimate the mortgage payment at a mortgage rate of 7%, let's do property taxes and insurance. The typical home in the US, let's go to Seattle. Let's just get local. The typical home in Seattle relative to the median income in Seattle, and we do pretty good here. We got a lot of tech, so our median incomes are higher than elsewhere in the country. Right. It would take more than 50% of that income or close to half, which means the middle income household does not really qualify for the typical home in Seattle.
A middle income person in Seattle, which is high, can barely afford a house, is what you're saying?
Can barely even qualify for a house in Seattle. So what does that mean? It means the middle income household probably buys, further out. They buy a smaller home. And the more common probably result is the middle income household rents for longer in Seattle. Yep. It takes them longer to save up for that down payment to even get to that typical home. Or the typical buyer that can buy in Seattle is on that higher end. Yeah.
So 7% is that the highest it's ever been? Is it where does that sit?
No. I think that's something that we also have to come to terms with. So 7% mortgage rate feels high because we got used to 3. And we probably should never have gotten used to 3.
That was during the pandemic, I assume.
Yes, and even a little bit before. Global financial crisis, right? We've gotten, as millennials, knocked around a bit.
That we have. Yeah. That we have, Skylar. Yes.
Right. So global financial crisis, super low mortgage rates before a lot of us could have the down payments to move forward, right? So miss that train. Yes. And then during the pandemic, super low mortgage rates again. Millennials are just starting to reach our late 30s, so might have missed that train as well. And now you're looking at high home prices plus those high mortgage rates. But if you were to turn back time, this is one of the challenges to talking to, say, older generation members, say, a parent, in order to get the down payment support that you might need, right? So you go there and you say, hey, mom and dad. And they're going to say to you, when I was buying a home, my mortgage rate was 13%. And the thing is that home prices are just so much more radically higher.
13% of a $200,000 home is different than a $1.2 million home.
So it's not the avocado toast. Yeah. You can take that to say, Chief Economist Skylar Olsen
you heard it here first, everybody. Don't cut your avocado toast.
Exactly. So it's not that. It is truly harder to become a homeowner now than it used to, despite the fact that mortgage rates are quote unquote historically in line now. They have been higher, but prices have not been this high.
Where do you think you see that 7% going? Will it change by the end of this year? It's not going to jump down to the 3.
Well, so Zillow has some formal forecasting around mortgage rates, and what we tend to do is we take in, a lot of the financial market data out there. Our forecasts have been getting more and more pessimistic, right? So at the beginning of the year, we were like, mortgage rates are going to be down at 6% by the end of the year. And then time goes on. 6.1%.
No, they're totally coming down.
Right. So May's forecast was 6.7% by the end of the year. Not a huge relief, but significant, still a little bit, a break that would matter to that person waiting, kind of on that cusp of moving forward.
Why do you think the Fed wouldn't? Why won't they just come in and be like, we'll help you out?
If we see surprisingly hot economic data. General inflation is highly painful. As we're starting to see, people can't really afford their lives, and so they're accumulating debt, and so that's a very painful. And so it would be even more painful if they let rates come down and inflation surged back up, and then they had to go even harder on us again in order to get that inflation down. So they might take a stance of we're gonna let it get hopefully not bad, but a little bit more painful to really get confident about inflation being down and stably down before they let it up. Because whenever we see mortgage rates come down below 7 and towards 6.5, we see the buyer very ready to move forward again, and we see that home price appreciation,
because they're probably sitting on their down payment. They've got the funds to go buy a house, but they're just waiting for that interest rate to go down. They're just waiting for
that moment.
So then when it goes down, they go out there and go buy all the houses. But then that creates correct me if I'm wrong, but does that create a problem? Because then you have 50 people looking at the same house. Yes. They're skipping the inspection. They're outbidding each other, and then the housing price is still high.
Right. And that would kind of reinforce, that would make, the inflation bad again. You know what I mean? So that just kind of reinforces, one, how powerful housing is to the general economy. Like, ooh, we're an engine. But two, kind of how careful the Fed will be moving forward in kind of not wanting to bring those interest rates down too fast, just so that we don't destabilize the system again. Which just means higher for longer is a phrase you hear more for interest rates. And lately, the longer mortgage rates stay near 7, the more we're starting to see the buyer pull back, even in places so May's numbers, which will release this month, showed a lot of a slowdown. So homes in Seattle took a little bit longer to sell. I said, that we were way down, right, relative to new listings, but that's returning. That's getting a little better. Those existing owners are starting to come back a little bit relative to last year, which was a really, really low year. But that's slowing things down, and that for prices, and that should be good.
So we've got some listeners here that are maybe first-time buyers looking to buy their house. What advice do you have for them?
Start early and thinking about just your financial plan, all of it, and kind of get educated about it. So I think probably the tactical thing that looks like is go get pre-approved, right? Because, mortgage rates, and they're jumping around a lot. You might be surprised what you can and can't qualify for, or what might be available. When you're approaching the housing decision, it is so personal. You might be, there might be an opportunity for you. Condos downtown, we're seeing where home prices are falling. So there are options out there depending on what.
Part of I would venture to guess part of the downtown thing is that there's this whole push of bringing locals back downtown and local spending downtown. We spoke with John Scholes at the DSA.
Oh, yeah.
That's a huge push for him. So I wonder if there's certain levers being pulled to try and entice people to come move downtown.
Oh, yeah. I mean, the fact that home values on those downtown condos are falling would help actually bring that buyer in. This is a better opportunity than it was kind of in the past. The buyer will have a better bargaining power. But I think Seattle... So we're downtown in the Russell Investment Center right now. It's still pretty empty in here, you know? So I think that work is still being done to get folks, back downtown. But it is important. And by the way, home values are not... that really soft home price appreciation is very, very downtown. Like I'm looking at zip codes downtown, as opposed to, the Ballards and, the West Seattles. That I think has, returned home price appreciation.
Yeah, I was just going to say, are there regional pockets where things are still hot, here, specifically in Seattle?
Yeah, I think the hottest parts are going to be up near your Kirklands, over in those suburbs.
In the rich areas. In Medina?
and some of that is not, a lot of that is just generationally. We've got a lot of these older millennials starting to have kids, want the burbs, want the good schools. So it's just generationally, that's the demand that's here right now. Seattle in particular attracts that age group because of our job market, with, tech and everything like that. We have a lot of younger adults here. And so, but not younger, not, on the 20. There's a lot of them too. But, the real 30s, is like those 30s. And they're moving towards those suburbs. And then the other element for like why those spots look hottest is we have, seen a bit of building, just not not there, right? So where we're better able to build is in kind of different suburban areas, around, and then some infill. And, we've seen some other construction continuing to go on too, that takes the pressure off more closer in though.
Okay.
I live out on Bainbridge Island. Home values are falling out there too. We might have went a little bit too far with our home price appreciation.
We maybe overdid it.
Maybe overdid it a little bit out there. A little market clapback going on.
Yeah.
But, still I think that would turn around. So yeah, definitely different pockets. Opportunities are in downtown, very downtown zip codes.
Okay.
Still probably wildly competitive in those northern suburbs, for sure.
So housing prices are you saying they're like more affordable in some of these areas, or are you saying that's just things are moving quicker in these
Things
areas?
are moving.
Yeah.
Yeah.
And that's what we wanna see.
Yeah. And where home values are falling, honestly, it's not affordable. It's just getting better.
Yeah.
So,
Yeah.
but that is, Seattle is now, top 10 most expensive markets in the country for sure. And that happened over the last decade for us.
Yeah. Well, you'd mentioned the elder millennial, and I kind of talked about like the growing family that are maybe sort of trapped in this home, kind of. So I guess, we asked about advice for first-time home buyers. What's the advice for this situation?
Yeah, this move-up buyer who's kind of stuck in the smaller home.
Hang tight?
Nah, it's going to be very challenging, right? Because I think, so where we're seeing the fastest home price appreciation is on those 4-bedroom homes. It's the ones... Because there are so many of these people, who like need to be doing that move up. Or even if you think about it, doubling, putting, roommates is, of course, easier the more bedrooms you have, right? And so there's a lot of pressure on those larger properties. So the advice would be like, well, get well supported by a great agent, do your due diligence here. But there are also, if you are kind of moving up, more and more ADUs, right? Having that option to kind of, maybe I can't move up, but maybe I can put,
unit.
Let's define it. Exactly.
Additional dwelling unit. I know that one.
Yeah.
Typically, colloquially known as mother-in-law, but...
Or granny flats, or...
Granny flats.
Like, what else are they called? Yeah, it just refers to, there's a separate little building in your backyard where someone can live.
Yes, right.
Absolutely.
Yeah.
And those are now more possible.
Yeah.
And very popular. And easier and easier to do, especially if you want to pick one of like the 4 options that the city of Seattle says you can do. Just different things that make it easier.
Okay.
And that can kind of take that pressure off. And then, if there is, like, let's say, the opportunity is, you can move up and then it's hard to find that option. Sometimes you can make it a bit more affordable if, renting out that, another bedroom or something like that could offer some opportunity there. But if you're stuck in that small house, it's hard to imagine sometimes adding another kind of income because that would defeat the purpose. So, but that is often needed, kind of higher incomes in order to afford housing in Seattle these days.
Yeah. I have a couple more questions for you. I know I'm putting you on the spot, but
no worries. Let's do it.
So we talked a little bit about the NAR, the National Association of Realtors.
Oh, yeah.
So I had this conversation on a previous episode where the lawsuit was settled.
Yeah.
And just a quick recap for the listeners, if you weren't on that episode, is, from my understanding, is that there was an commission rate of 6% that the National Association of Realtors set, but legally it wasn't set, but everybody thought it was set. Yeah. So then you had all these buyers and sellers paying a 6% commission, 3% to the buyer's agent, 3% to the seller's agent. Yeah. And then basically the NAR was sued saying you can't have a set 6% rate. You need to make that negotiable and things like that.
Yeah.
Did I summarize that?
Yeah, that's okay. Absolutely very high level summary for sure. So the element and then the settlement kind of happened, right, to kind of basically do a few things, add transparency. So that was another big part of it. Is like, as a buyer, you need to be aware that there is a buyer's agent and how that buyer's agent might be paid. So that was a big part of the settlement. But honestly, that has actually long been required in the state of Washington to have that. So that might actually be something newer for others.
For other people.
That buyer's agreement kind of idea.
Got it.
And then, of course, this idea idea of, you're right, you can't, and what happened in the settlement was about you can't advertise within the 6% commission on the MLS. And the MLS is the multiple listing service that all the agents, and brokerages upload their listings to. And then Zillow actually gets feeds from MLSs, and those are the listings that show up on our website. Yeah. Right?
So weren't they on this? They were on the site being like, hey, I'm only going to accept houses that have the 6% commission. I'm only going to show my buyers, like my couple, these houses. And so they were kind of influencing the commission rate. Right?
Well, that's the idea of if you were to post it on the MLS, the idea is that that's what you would be doing, right? And then so this settlement said you can't post it on the MLS anymore. And we're also going to be more transparent to the buyer about the relationships. And, ultimately, I think what then people started to talk about and what we're currently thinking through and trying to measure and, trying to look at is, will that mean that commissions will start to come down, right? Because then...
Because that was going to be my question too, is after this lawsuit, all this transparency, will the commission rates go down and how does that affect the housing market?
Yeah. One thing that's kind of interesting is that... commissions rates have already been kind of coming down a bit over time on average, like the average commission rate. Because you're right, some agents, very stuck on the 6%, but this is a diverse industry, lots of, different people coming up with different concepts. Nationally, the average was probably around 5.2% commissions that was then split. But that 6% split was also still very, very common. So that's something to kind of think about where even today, right, and even before, you always were kind of able to negotiate that commission. It was just how difficult that might have been. So now we're moving forward. What's going to change? One, too early. So too early in the sense of possibly even still a world for lawyers and not economists. Like what did functionally, practically change about these relationships and then how that would impact the market. We don't see anything dramatic yet, right, in terms of the data that we do have, though Zillow is, of course, kind of exploring what we can see about this idea. And then I think what people are interested in is not just what changes to commissions, but from it's more about will that affect home prices? Because from the buyer's side, they never directly paid that commission, right? It just came out of the home price because the seller would have paid the buyer's agent's commission. So if the seller's paying less commission, does that mean that home price comes down?
Right. So it's all wrapped up in one price. You have let's say $1 million home. The buyer pays $1 million, doesn't necessarily know that some of that, knows that some of it, but don't know exactly how much goes to that agent. So the question is, is the person selling their home going to be like, well, I don't have to pay the 6%. Instead of $1 million, I'll go down to $900,000. I just don't see that happening. If they can get the $1 million, they're going to get the $1 million. Right?
Well, and the reason why, right, is all the things that we just talked about. Which is if what's affecting home prices right now, well, a lot of things more dramatic than that buyer's commissions. Because we're at, we're dramatically low on the number of listings that are available to a massive population of millennials. So any new influx in supply is going to be way more impactful on that home price. And we were talking about the mortgage rates jumping around. I run this algorithm called rent versus buy. And I put all those upfront costs in when you become a buyer, including the commission and home price forecasts. And if you're a renter, I assume that you're going to go get a guaranteed 6% return, in some other asset or something. So, all the little parts in this big economic decision. And dropping the buyer's commission by 30% is kind of on par, or rather smaller in terms of its impact on that buyer's decision to buy versus rent, as changing your mortgage rate by 0.5 percentage point. And that mortgage rate changes a lot these days, right? So in terms of what's moving home prices and what that impact is, there's just too many other gnarlier things going on than that buyer's commission side in terms of what we might see actually on prices.
Okay, good to know. Let's talk a little bit about we've talked about how Seattle has a lot of tech, a lot of workers. We're also seeing a lot of tech layoffs. So I sort of have two parts to this question, but one is that as dramatic as we think it is with all these news articles about all the layoffs? Is it really affecting, I don't know if you can speak to that, but is it really affecting their ability to buy and sell? And then the other part of that is how is it affecting hiring and recruiting to bring people into Seattle when we've got these housing prices? So I don't know if you want to speak to either one of those.
So it is a big deal. I haven't done any modeling to pass that kind of job growth kind of through to Seattle home values in particular, but our national forecasts definitely do take into account job growth, population growth. Like those things are just so, they do matter. And I do look at the employment by industry in metros all across the U.S. Nationally, information jobs like tech jobs kind of also started declining nationally, just like they have been. We've been seeing more layoffs and kind of jobs in information had been coming down in Seattle. But once nationally it hit the trend that was just general employment, it started improving again. Seattle didn't really start improving again, which is why I'm pointing to it is something that I think a lot of, we are thinking about in Seattle, and that, tech is struggling more here, but more recent, very, very recent numbers we're turning around. So it's not a long-lived thing. We still probably have good legs, in terms of turning this around. We just went through a bigger shock, a bit of a bigger, probably a bubbliness, in the information tech job growth when the pandemic boomed, right?
Yeah.
So we're going to account for that.
Yeah.
Now, in terms of, are we having a harder time kind of recruiting here or building up information jobs here and tech jobs here because it's very expensive? I think that is actually something that a lot of Seattle employers think about.
Yeah.
And then I think that's also why a lot of Seattle employers get involved in affordable housing policy and, start thinking about how to advocate for, more housing and more supply and things like that, because we need affordable housing. And I don't even just mean affordable housing with a capital A that's regulated and kept that way. I mean just housing that's affordable for
your everyday person.
Normal,
right?
Everyone.
Like we're not talking people on
nothing. Everybody, we're having a hard time for everybody here, right? So to have. Just to get anecdotal about it, I guess, I make pretty good money in tech. I'm doing okay for myself. In 2018, I moved way out and accepted an 1.5-hour commute each way.
Wow. Because
we had already gotten so expensive. Right? Now I don't have to commute in because Zillow's Cloud HQ, so it's just a windfall for me, and my home values did very well. Yeah. But that already just showed you how, I'm the chief economist of Zillow now. I'm doing okay, right? And I was priced out. Tech got priced out too of this area, right? So we do need to be building more in order to keep our job market healthy.
Yeah. Well, Skylar, we're at time, but I do want to give you an opportunity. Is there anything else that you want to say? Anything you want the audience to know? Anything you want to plug? Any other thoughts?
Yeah. Definitely want to plug things. Check out Zillow.com/research. That's my home base.
Okay.
So you could totally go to Zillow and play adult pretend time and look at the homes. Yeah. But when we make those products, we make those marketplaces, we also provide we create this opportunity to understand these markets. And my new section on that Zillow.com/research, if you click on a tile that says dashboards, you can explore the data yourself down to zip codes, and it's kind of fun. It's really interactive.
Zillow.com
so check that out.
/research, and then check out the dashboard on
the
that.
dashboard the tab. Yeah. Check out the dashboard tab.
Anything else?
Yeah, sure. No, I'm just kidding. We can keep going
let's see.
How much time do we have? No, totally. Good luck out there. Things are always changing. And I would say, you're a journalist as well. And sure. I'm not a journalist. I just work with journalists.
I feel like I kind of just talk shit about the news, but
sure. Yeah, absolutely. Well, and maybe you would actually, so you'd love what I'm about to say next is, don't stop at a headline right now.
Yes.
Right? Because right now it is very confusing, and headlines can be made from the sensational number, and when you double tap on the article, you get, a lot more nuance and better decision making for better understanding. Well, hey, which is why you have this podcast, huh?
That's right.
I was
like, or don't read, just listen to the podcast.
At the very least, don't stop at the headline. Yeah. And that's a mutual advice then.
Don't stop at the headline, and also tune into the podcast.
Yes, exactly. Yeah. There you go.
Perfect. Well, thank you so much, Skylar. I appreciate you sitting down. I appreciate you hosting us. Shout out to Andrew Taylor, who's behind the cameras operating. Thank you so much. He's a buddy of mine. And shout out to Alex, who helped organize and create this setting today.
Yeah, absolutely.
Thanks, everyone. This has been The Weekly. Make sure to check back next Sunday for the latest local business news. We love listener feedback, so if you have any story suggestions, comments, or complaints, email us at theweeklyseattle@gmail.com. We'll see you next time.